Remember when boomers called Gen Z lazy? Well, the 2025 workplace numbers are in, and they tell a different story, one that's both surprising and a little funny. Gen Z logs the fewest overtime hours of any generation, but somehow manages to pull in the highest side hustle income per person. It's not about a lack of commitment, it's about finding work that actually feels worth doing. We sifted through Bureau of Labor Statistics reports and gig economy data, and what some call laziness might actually be a clever career strategy. Of course, the idea of young people flipping the script on work isn't exactly new. Historical context of generational criticism. Criticism of younger generations is a pattern as old as civilization itself. Across centuries and cultures, older generations have found new ways to express the same doubts about youth. Aristotle, writing in the 4th century BC, described young people as high-minded and convinced they know everything, a sentiment that echoes through the ages. Ancient Chinese scholars, Renaissance philosophers, and even 20th century newspaper editors all took their turn at lamenting the supposed decline in work ethic and ambition among the young. These critiques have evolved in their language, but the underlying message remains remarkably consistent. Historical records show that each era's complaints mirror those of the last. In the 8th century, Han Yu observed that young people wasted their days in frivolity, while in the 1500s, Erasmus worried that youth aspired only to luxury and idleness. By the early 20th century, headlines declared that the younger generation knows nothing about hard work. Even in the 1950s, personnel manuals grumbled about young men arriving to work unshaven and poorly dressed, a complaint that finds its modern equivalent in remote work debates about hoodies and pajamas on Zoom calls. The persistence of these criticisms underscores how little the conversation has changed, even as work itself has transformed. In recent decades, generational criticism has shifted from anecdotal gripes to data-driven observations. Surveys like Monitoring the Future, which has tracked the attitudes of American high school seniors since the 1970s, provide a detailed look at how young people view work. The survey's questions about willingness to work overtime reveal a marked decline. In 2022, only 36% of 18-year-olds said they'd work extra hours, down from 54% just 2 years earlier. This is the lowest level in the survey's history. Another question asks if respondents would still want to work if they had enough money to live comfortably. The percentage answering yes fell to 70% in 2022, another record low. Fewer high school seniors now expect their future work to be extremely satisfying, with just over 20% expressing that belief, a steep drop from earlier years. The narrative of declining work ethic is reinforced by generational polling. The 2025 Generational Attitudes Survey found that more than 70% of boomers, and nearly as many Gen Xers believe, Gen Z lacks work ethic. Yet, when asked about their own youth, a majority of these same adults admit their parents once called them lazy too. Millennials, who were themselves labeled as entitled job hoppers, now echo similar criticisms of Gen Z. The cycle repeats, with each cohort inheriting both the skepticism and the urge to pass it on. Despite the familiar complaints, economic realities have changed. Wage growth for young adults has lagged far behind rising costs, especially for housing. Adjusted for inflation, today's 25-year-olds make significantly less than boomers did at the same age, while facing much higher living expenses. These conditions shape attitudes toward work and overtime in ways that earlier generations did not experience. Where previous generations may have accepted unpaid overtime as a path to advancement, Gen Z questions its value, especially when alternative income streams are available. Technology has accelerated the pace of generational change and amplified the conversation. Critiques that once circulated in office break rooms now spread quickly on social media. Viral trends highlight the disconnect between traditional workplace expectations and new approaches to productivity. Gen Z's comfort with digital tools and gig work is often misunderstood as a lack of commitment, when in reality it reflects a different set of priorities and a pragmatic response to current economic pressures. If there's a lesson from history, it's that generational criticism reveals more about the anxieties of the critics than the habits of the young. Work ethic is always in flux, adapting to new realities, technologies, and opportunities. The numbers show that Gen Z's approach is not simply about doing less, it's about rethinking what work should look like. And as new data emerges, it's clear that some of the most interesting shifts are happening not in the hours spent at a desk, but in how young people choose to allocate their time and energy. The overtime paradox. One of the most persistent puzzles in the 2025 workplace is what some are calling the overtime paradox. Gen Z is logging the fewest overtime hours on record, yet their participation in side hustles and gig work is higher than any previous generation. According to the Monitoring the Future survey, just 36% of 18-year-olds say they're willing to work overtime, down sharply from 54% in early 2020. This is the lowest point in the survey's nearly 5-decade history. At the same time, gig economy platforms report that Gen Z now makes up close to 40% of their user base, a figure that outpaces older generations by a wide margin. Traditional measures of overtime miss a significant part of the story. On average, Gen Z works 2.1 fewer overtime hours per week than millennials did at the same age. But when side hustles are included, they're adding back an extra 5.3 hours of paid work each week. Platforms like Fiverr and Upwork show Gen Z freelancers earning 28% more per project than the site average. The reason isn't just volume, it's that they're choosing high-value, short-term gigs over long stretches of salaried overtime. For many, building and selling a digital product or completing a specialized freelance task is simply more lucrative than staying late at a traditional job. The shift is also powered by technology. Gen Z has adopted automation tools at a much faster rate than their older colleagues. Surveys show they automate 43% of routine administrative tasks that once required overtime, compared to just 12% among older workers. Email filters, meeting summarizers, and workflow automations save hours each week, freeing up time for paid work outside their main job. Productivity software companies report that Gen Z users are 3 times more likely to try new tools and integrate them into their daily routines. Financial incentives play a clear role in this behavior. Bank data shows that side hustle income now covers about 34% of Gen Z's average monthly housing costs, compared to just 18% for millennials at the same age. The cost of rent now takes up 47% of a typical entry-level salary, far higher than it did a decade ago. With traditional wage growth lagging behind expenses, it makes sense that Gen Z would prioritize flexible, scalable work over unpaid or underpaid overtime. Attitudes toward overtime also differ sharply across generations. Managers over 45 often interpret Gen Z's refusal to stay late as a lack of commitment. Gen Z, on the other hand, frames it as setting healthy boundaries. The Deloitte Global Gen Z and Millennial Survey found that 68% of Gen Zs value work-life balance over climbing the corporate ladder, and only 6% name leadership roles as a primary goal. This shift shows up in workplace habits. Punctual clockouts are common, but so is a thriving after-hours entrepreneurial culture. There's also evidence that Gen Z is more financially savvy in managing their side work. Tax data shows they're more likely to track and deduct legitimate business expenses, averaging $3,200 in write-offs annually compared to $1,700 for older freelancers. Online communities share resources about IRS rules and gig opportunities, reflecting a level of financial planning that goes beyond simple hustle. For employers, these trends create new challenges. Overtime pay is no longer a strong incentive, with only 12% of Gen Z workers responding to it, compared to 37% of millennials. Flexibility, on the other hand, has a measurable impact on retention. Some companies have started offering side hustle tow, paid time off specifically for external projects, in recognition of the skills and motivation employees gain outside their main job. The overtime paradox isn't just about working less. Gen Z's approach prioritizes efficiency and output over hours spent in the office. Time tracking studies show they finish core job duties 11% faster than previous cohorts, redirecting that time into supplemental income streams. Critics who focus only on declining overtime rates miss the broader shift. This generation is navigating work in a way that aligns with their financial needs and values. These changing patterns can't be separated from the economic pressures Gen Z faces today. Their choices around overtime and side hustles reflect a practical response to new financial realities, not just a rejection of traditional work norms. Financial realities versus stereotypes. Economic conditions in 2025 have created a gap between stereotypes about Gen Z's work ethic and the realities they face. The numbers show that financial insecurity is rising among young adults. Nearly half of Gen Z and millennials now say they do not feel financially secure, a sharp increase from the previous year. Entry-level salaries are not keeping pace with the costs of living, and the median-priced home now requires an annual income double what most starting positions offer. Rent has climbed more than 30% since 2019, while wages have only increased by 20%. This has led almost half of Gen Z aged 18 to 29 to continue living with their parents, not out of preference, but because of necessity. The age at which people buy their first home has shifted dramatically. Where first-time buyers in the 1980s were typically in their late 20s, the median age has now climbed to 38. It's not that young adults don't want to own homes. Rising prices and stagnant wages have simply put that goal out of reach for many. Credit card debt is also higher for this age group than it was a decade ago, after adjusting for inflation. For a growing number of young workers, financial security now outranks the pursuit of passion in their career choices, according to recent survey data. This marks a clear shift from the priorities of previous generations. Student debt is another major factor. Although Gen Z's average loan balance is lower than that of millennials, it's increasing at the fastest rate among all age groups. More than a quarter of Gen Z student borrowers are carrying this debt, which limits their ability to take career risks or make major life decisions. Federal Reserve research shows that less than half of certain Gen Z groups, such as those who didn't finish college, women, and Black and Hispanic adults, believe that the long-term financial benefits of a degree outweigh its costs. This skepticism about the value of higher education is new, and it reflects a broader uncertainty about the payoff from traditional career paths. The loss of purchasing power is stark. Entry-level wages for young workers today buy significantly less than they did for previous generations. Housing now consumes nearly half of a median Gen Z income, compared to less than a third for young adults in 2010. These pressures are reflected in the numbers. 48% of Gen Z say they feel financially insecure, up from just 30% the year before. It's not surprising, then, that many are looking for new ways to earn money and manage expenses. Multiple income streams have become the norm. Where earlier generations could support a household on a single income, today's young workers often juggle several jobs or side projects. Nearly 30% of student borrowers rely on gig work to help pay off their debt. These are not just passion projects, they're essential for covering basic costs. The rise in gig work is less about rejecting traditional employment and more about adapting to a financial landscape where stability is harder to achieve. Delayed milestones in adulthood are another result of these financial constraints. Marriage rates for those under 30 have dropped, and fewer young adults own cars compared to prior generations. These trends are more closely tied to economic limitations than to changing values. The cost of healthcare and education has soared, while retirement savings have fallen. Fewer young workers participate in employer retirement plans, and wealth-building opportunities like homeownership are out of reach for many. Employer expectations have not always kept up. Many companies still base compensation and promotion structures on outdated assumptions about what young workers can afford or prioritize. As a result, Gen Z places a premium on immediate, tangible rewards and flexibility, rather than long-term promises that may never materialize. Financial stress is visible in the workplace, with Gen Z reporting higher rates of distraction and shorter job tenures than previous cohorts. Family support has also declined. Fewer young adults receive parental help with major expenses like home down payments, making it riskier to take financial chances. This reduced safety net leads to more cautious career decisions, even as stereotypes persist about Gen Z's willingness to work hard. As the economic landscape continues to change, young workers are finding new ways to navigate the challenges. Their approach to work and money reflects a careful calculation of risk and reward, shaped by the realities they face every day. This shift sets the stage for a closer look at how alternative income streams are reshaping the world of work. The gig economy effect. Gen Z's rapid adoption of gig work has shifted the foundation of employment for young adults in 2025. Nearly half now participate in gig or platform-based jobs, far surpassing the rates of older generations. According to recent research, 46% of Gen Z workers in the US engage in gig work, compared to just 37% of millennials. This isn't about rejecting work altogether. It's a practical response to financial pressures and a labor market that rarely offers stability or advancement in traditional entry-level roles. The financial case for gig work is clear. Entry-level corporate jobs typically pay between $18 and $22 an hour, but skilled Gen Z gig workers often earn $30 to $45 per hour on platforms, especially in fields like graphic design, video editing, or specialized tech services. By working directly with clients, they avoid agency cuts and middlemen, which means more money for the same work. For example, a designer selling projects on a freelance platform might net $50 per job, while the same work through an agency yields half that. Rideshare drivers and delivery workers also report higher take-home pay compared to traditional taxi or courier jobs. This direct compensation model explains why the majority of Gen Z gig workers say they prefer independent work, despite its unpredictability. Financial savvy is another defining characteristic. Gen Z gig workers are more likely than older freelancers to track expenses and claim tax deductions, averaging $3,200 in write-offs each year. Online communities serve as informal education networks, sharing advice on everything from IRS rules to maximizing legitimate business expenses. Common deductions include portions of phone bills, mileage for deliveries, and home office costs. This level of financial literacy stands in contrast to stereotypes about young people being careless with money. Specialization and adaptability drive higher earnings in the gig economy. Gen Z dominates fast-growing niches. Short-form video editing, AI prompt engineering, and social media consulting are just a few examples. Surveys show that 68% of Gen Z gig workers have learned new digital tools specifically for platform work, compared to less than a third of older freelancers. This willingness to adapt allows them to capitalize on emerging opportunities quickly, often outpacing traditional job wages within a few months. Flexibility is just as important as income. A large majority of Gen Z gig workers rank control over their schedule above job stability. Gig platforms let them choose when and how much to work, scaling their hours up during peak times and cutting back when needed. This flexibility is a major reason why gig work appeals to so many, especially when traditional jobs offer little room for personal time or outside interests. Traditional benefits such as employer-sponsored healthcare or retirement plans are less of a draw for this generation. Only about a third of Gen Z gig workers express concern about missing out on these benefits. For many, immediate cash flow is more pressing than long-term perks, especially when living expenses consume such a large share of their income. Marketplace insurance options and alternative retirement savings tools have partially filled this gap, allowing young workers to prioritize current needs. Despite the perception that gig work is unstable, many Gen Z workers report more consistent monthly income than they did in previous service jobs. This is largely due to diversification. The average Gen Z gig worker maintains nearly 3 separate income streams. When demand drops on one platform, others can pick up the slack, creating a buffer against sudden changes in the market or platform algorithms. Gig work also builds transferable skills. A young worker who juggles food delivery, freelance design, and social media consulting gains experience in customer service, negotiation, and project management, skills that can lead to better opportunities down the line. Many report that their platform experience has helped them secure more desirable full-time roles or launch their own businesses. As companies lag behind in updating pay structures and benefits to match these new work patterns, Gen Z continues to seek out the flexibility and earning potential of gig work. The result is a workforce that looks very different from previous generations, one that values autonomy, efficiency, and adaptability over the traditional markers of job security. The changing shape of work doesn't stop with the gig economy. New forms of employment are emerging as technology and workplace expectations evolve. Remote work revolution. Remote work has become a defining feature of the 2025 job market, with a majority of companies now offering some form of flexibility. 60% of employers provide remote or hybrid options, and among small businesses, that number rises to 73%. This is a stark contrast to the pre-pandemic era, when less than a fifth of roles allowed any telecommuting. The shift is driven by clear business incentives. Companies report operational cost reductions of up to 18% and higher retention rates among employees who can work remotely. The appeal isn't limited to employers. More than half of professionals now say they prefer fully remote roles, citing flexibility and work-life balance as top reasons. Gen Z's approach to remote work, however, defies some common assumptions. Despite their reputation as digital natives, only 23% of Gen Z remote-capable employees say they would choose fully remote work, according to Gallup's 2025 survey. This is the lowest preference rate among all generations, with millennials leading at 35%. Gen X and boomers fall in between. For younger workers, the drawbacks of remote work are practical. Many lack dedicated home office space and see value in face-to-face mentorship, especially in the early stages of their careers. Career development opportunities and social connections often still cluster around physical office spaces, making hybrid arrangements more attractive for those just starting out. Productivity data continues to challenge the old skepticism about remote work. HubSpot's research finds that remote employees average 4.5 hours of focused work each day, compared to 3.7 hours for their in-office peers. This adds up to over 4 additional hours of focused time per week, a 22% increase. Other metrics reflect similar gains. Error rates among remote workers have dropped, and project completion speeds have improved. These trends hold across a range of industries, from technology and finance to creative fields. The market for productivity tools has grown alongside remote work. Virtual whiteboard use has increased more than 5-fold since 2020, and AI-powered meeting assistants now handle nearly half of all note-taking duties. Gen Z, in particular, adopts these tools quickly, but customization features are most popular among millennial managers overseeing distributed teams. The technology helps bridge gaps in collaboration, addressing early complaints about brainstorming and documentation in remote settings. Compensation expectations have also shifted. Many remote workers accept slightly lower base salaries in exchange for flexibility, with average pay reductions of around 8–12%. This trade-off appeals especially to mid-career professionals. 41% of millennials say they would consider leaving a job if remote options were taken away, compared to just 28% of Gen Z for younger workers. Career advancement remains a higher priority than remote work alone. Physical office spaces are not disappearing, but evolving. Companies have reduced their real estate footprint by an average of 35% per employee, moving toward shared workspaces and hoteling systems rather than assigned desks. Office attendance now peaks midweek, while Mondays and Fridays are the most popular days to work remotely. This concentration of in-office days has created new coordination challenges, with many hybrid workers reporting difficulties scheduling collaborative work. Remote work also brings tangible personal benefits. Employees save an average of 8.5 hours per week on commuting, gaining back the equivalent of a full month each year. Financial savings from reduced transportation and meal costs now average $4,600 annually per remote worker. These factors contribute to high satisfaction rates, even as some report feelings of isolation or disconnection. Management practices have adapted at different rates. Companies relying on keystroke monitoring or activity trackers see higher turnover, while those focused on deliverables and output quality retain staff more effectively. Generational differences are clear. Older managers are more likely to favor monitoring software, while Gen Z supervisors prefer regular check-ins and outcome-based evaluations. Remote work has also changed the geography of hiring. Employers are sourcing more talent from lower-cost regions, leading to greater wage variability for the same roles. Gen Z workers are the most open to relocating for hybrid positions, with a third applying to jobs outside their immediate area. Training and onboarding have moved online as well. Virtual reality and video libraries are replacing traditional in-person sessions, with Gen Z showing a preference for asynchronous resources that can be accessed anytime. While the pace of remote work adoption has leveled off after rapid early growth, the model now appears stable. Full remote options remain rare for entry-level roles but are common for experienced professionals. As the workplace adapts, new patterns of engagement are emerging, some visible, others more subtle. These changes are beginning to show up in how employees participate or choose not to participate in their jobs. Quiet quitting, too. The rise of quiet quitting, too, marks a shift in how work engagement looks in 2025. The phrase first gained traction in 2022, when millions of young workers began openly discussing the idea of doing only what a job requires, no more, no less. By 2025, Gallup's research shows that employee engagement has reached its lowest point in a decade, with only about a third of workers describing themselves as actively engaged. While this isn't limited to Gen Z, younger workers are at the forefront of redefining what it means to participate in the workplace, focusing less on traditional advancement and more on protecting personal boundaries. Quiet quitting is best understood as a reaction to the erosion of clear work limits and the expectation of constant availability. Instead of outright resigning, employees simply stop going above and beyond. The movement's evolution is visible in how Gen Z approaches their jobs. They meet expectations, but rarely exceed them unless there's a clear incentive. Social media platforms, especially TikTok, have accelerated the spread of these tactics. Viral videos demonstrate how to stick strictly to job descriptions, decline unpaid tasks, and use time-tracking tools to mark every break. This isn't just about slacking off. It's a visible, collective adjustment to workplace norms that have long demanded more than what's written in a contract. A key part of quiet quitting, too, is the acting your wage mindset.